Hi guys, welcome to another video. So today I'm going to be speaking about why the stock market has had a crash or correction and what you should do and why this happens as well. So first of all, I'm going to be using the example of Tesla. Of course, Tesla is one of my biggest holdings. Now Tesla has fallen about 26% from the all-time highs recently in January, which is quite a lot. However, I think given the past few months and of like a rally, I think this is quite healthy for the market to happen actually. So this is a good thing. If you're scared, just stay calm, and I'll tell you what you should probably be doing and thinking about right now as well. So first of all, let's go right into the chart. Now as you can see, I've put some indications on where we've had some recent crashes. So you can see this is the most recent one, 2021, about 26%, 25%, and then we had another one here as well in September, which I'm sure many people kind of remember. That was also 34%. We had another one here as well, which was 36%. Then we had another here, which was 61%. Now this was actually, of course, this was the March 2020 crash. But however, you can see, how much Tesla has crashed in the past. And basically what I'm trying to say is that you don't have anything to worry about actually. So now you can see, if I zoom out a little bit, now you can see that Tesla has had plenty of crashes over the years. If I zoom in specifically onto little things, now this is nothing. This is just going up in a trajectory. Over time, it's going to be going up, so you don't have to worry about it. Every time there's a pullback like there's been right now, this is actually your added chance to add cheaper. What I'd recommend is just dollar cost average slowly into the position as the market drops, and you can get the same stock, of course, cheaper. So just look at it this way: if you're buying Tesla right now, it's 26% on discount, and basically when it hits again same level where it was and even higher, then your gains will be even higher. So guys, obviously it's there's a lot of news out there, and fake news especially. You just have to kind of focus, and if you've done due diligence, then you shouldn't really have anything to worry about. I'm still a happy Tesla shareholder. I've added a few shares actually in the last few days. I'm actually hoping it kind of drops one more time before it bounces back, but let's see. But I do think it might have touched upon a decent support level here as well, so let's see. But yeah, so as you can see guys, if you've done your research, then you shouldn't really have anything to worry about. Like I said, a pullback is quite healthy, especially in a bull market, which we've had for many months. If even the S&P 500, it's really healthy for the market to pull back a bit and take a little bit. Now another thing also to consider right now which is happening is you've had the announcements of the vaccine kind of getting rolled up quite rapidly in the UK here especially, and also I know the US are gaining a bit of traction. So let's go into the charts again, and I'll show you what's happening. Another thing of what's happening right now. So you can see, for example, here we've got all the technology stocks down. Microsoft, Apple. Now this is actually recovered because I'm recording this a day later. But yeah, we've got a lot of big losers within the tech space. Then we've got, again, most of these were down yesterday, and the last few days, Tesla especially was down by a lot. I believe maybe even 12% as well, maybe 8% in one day just yesterday. And you can see actually there's been kind of like a turnaround in money, so there's kind of like a transformation. So money is kind of moving from like technology stocks into some of the more traditional stocks. So you can see here, energy was quite strong yesterday. Utilities were quite strong as well. Industrials quite strong. Some healthcare held up a little bit yesterday. Also some financials held up as well to some extent. So what that means is just that there's some money which is moving from tech or growth stocks into more of the dividend stocks, some of the older stocks, just because there's anticipation that the pandemic is coming to an end shortly. So it's nothing to worry about. Some money is going to get moved down from, or people are going to be taking profits from the growth stocks and putting that into some of the dividend paying stocks, which are currently or were currently undervalued at the time which is very healthy, very normal. It's almost like just rebalancing portfolios. So it's really normal, guys, so nothing to worry about. I believe what's going to happen is people are going to take some profits like they're doing now and maybe rebalance and put some money into the stocks they believe are going to shoot up when the economies open up. And then as time goes on, they are going to start again. Growth stocks are going to look cheaper, so stocks like Tesla are going to look a bit cheaper, and then people are going to come back again into growth stocks. So there's nothing to worry about. As long as you've done your due diligence, guys, you should really be adding more to your portfolio. And yeah, happy buying at discount prices. Now guys, if you found that useful, please like the video, and if you haven't already as well, please subscribe. And guys, I'll see you in the next one. Hope that helps. Cheers.